that's where Bitcoin is becoming clearly unique. I sense what's happening is there's bids below the market in Bitcoin and offers above in the stock market. But I think we're heading to one of the greatest reversions in history in terms of risk assets. Maybe 2022 might be similar to 1929. We see the global markets, the world heading towards pretty severe recession, and most central banks, led by the Fed, are still tightening. That's pretty bad.
Hey guys, welcome back to Library of Wealth. Today we have senior commodity strategist Mike McGlone. McGlone believes that the second half of 2022 will resume with a bull market in crypto and that Bitcoin is likely to become a risk-off asset in the near future. He advises that it is imperative that people consider the reason why Bitcoin has decreased in the first place, and goes on to point out that the market has undergone one of the biggest corrections in the stock and bond market in over 40 years. As an impending global recession looms on the horizon, Bitcoin remains a strong indicator of what is going on in world markets. Let's listen to this interview with Mike McGlone as he gives his take on Bitcoin and his prediction for a strong bull market at the end of 2022. Don't forget to like and subscribe if you like what we do here on this channel. Let's get right into the video.
Bitcoin has been, by definition, probably one of the greatest bull markets in history, and it's just backed up at the highest velocity to the greatest discount ever versus its 100-week, 50-week, 200-week moving averages. So it's pretty well discounted. What I see it's doing now is it's probably building a base around 20,000, similar to when it did around 5,000 at the end, at bottom in 2018 and 19. And the key thing we have to think about is, why is Bitcoin down? Now, the whole market's corrected a lot. It really got silly, speculative, expensive with all cryptos, and it's correcting now because the whole tide's going out. Remember, we've had one of the biggest corrections in the stock and bond market in my career, and I've been in the pits since the 80s. I've been in the business since the 80s. So the whole tide went out, Bitcoin and cryptos went down with the market, and now it's a question of which comes out ahead. And I see Bitcoin coming out ahead because I see it transitioning to be more of a risk-off asset like bonds and gold than less and less of a risk-on asset like the stock market. If Bitcoin does what it normally does, it's going to recover from these levels. It's just a question of time. Now, if the Fed keeps hiking at the highest velocity, the greatest pace since it's basically since 1980. Yeah, that's gonna. Yeah, that's a sledgehammer for all risk assets. But I think in most scenarios, Bitcoin will do better. So let's look at the best case scenario. Let's say everything recovers, the stock bear market's over, and it starts to trickle higher. In that environment, cryptos, and most notably Bitcoin, most notably cryptos like the Bloomberg Galaxy Crypto Index, will outperform most assets. It continue to do that. That's what it has been doing. I think we're heading to one of the greatest reversions in history in terms of risk assets. Maybe 2022 might be similar to 1929. We see the global markets, the world heading towards pretty severe recession, and most central banks, led by the Fed, are still tightening.
McGlone believes that people have seen that the Fed has become increasingly aggressive with a high pace of increased points. The intense increase has created what McGlone refers to as the Great Reversion. This Great Reversion has created a significant correction in the stock market. Because cryptos are such an accurate indicator, they are the lead in a race of what McGlone refers to as a pendulum of risk assets that has swung too far one way and is now swinging back.
So the Great Reversion of 2022 is something I've been speaking about since December of last year, because it's don't fight the Fed. The Fed is being aggressive, and they're becoming much more. They have been much more aggressive than most people anticipated. Just the 40 days between the June hike and the July hike was the highest, 150 basis points. That's the highest pace of hiking since Volcker in early 1980s. So that's the great reversion I'm speaking to, and we've had a pretty substantial correction in the stock market. We basically wiped out $25 trillion from global equities. Cryptos wiped out maybe this year total of $1 trillion, a rounding error compared to what's happening globally. That's the great reversion. I think it's going to continue. Basically, the pendulum of risk assets swung way too far one way, and now it's swinging back the other way. Cryptos were a leading indicator, and they're the hottest, fastest horse in the race, the hottest markets. Now they're coming back. So what I see is happening is we're going to continue that mean reversion from prices of condos in Miami to the stock market, and the bond market will probably do well if we head towards deflationary recession. That's my call. commodities should collapse. That's not profound. That's typically what they do. The Bloomberg Commodity Index dropped 20%. It's dropped 50% twice since 2008. I fully expect it again. Crude oil should collapse, and Bitcoin should come out ahead with gold and treasury bonds. That's my vision. That's my base case. So the on-chain metrics are pretty positive. We've seen different addresses used, zero balances addresses. My colleague, Jamie Douglas-Coates, based in Singapore, has been digging into that. A lot more of it's more functional and anecdotal, and what I hear from inside scoop from people saying, well, okay, well, this is becoming global digital collateral, and it's probably greater risk to not have part of it. And we all know what's happening with supply. It's clearly declining. So that, to me, is the key thing. It's basically becoming competition for bonds and competition for gold. That's nothing new. It's continuing. It's just in continuing trends that every day that goes by that this space that doesn't fail becomes more legitimate. I've been saying those same things for years. So to me, now that we've backed up to the most significant discount almost ever in terms of a 200-week moving average, 100-week moving average, then I think that's going to be more responsive buyers. The key thing what's happened is the opposite has happened in the commodities. You look at commodities like crude oil, it's becoming redundant, and it bumped up. I look at that as that's an enduring bear market that got very expensive. It's coming back. Bitcoin's an enduring bull market that got very cheap. Expect reversion to favor Bitcoin versus things like commodities and crude oils. And to me, that's the key thing I think to expect in 2H. Bitcoin to continue to recover, not trade much below 20,000. Basically, it could obviously get hammered like it did around 5,000. It bottomed there 3, but it's basically built the base around 5,000 starting in 2018, and it to come out ahead. And eventually, at some point, I fully expect it's on trajectory to get to $100,000. It's just a question of time, because I don't think the adoption is going to do anything but increase, and we know supply can't do anything but decline. It's already started happening. Copper, the Bloomberg Industrial Metals Index was up 40% in the year. Now it's down 10%. Copper was up about 10%. Now it's down 20%. Lumber, one of the biggest darlings of the commodity bull market, it's down 50% on the year. Yes, Europe's having some major problems with natural gas, which is more local, but on a global basis, we fully expect energy to do what it always has in history. When it pumps this much, it dumps just as much. It's a question of time. And what we're seeing now is the beginning of a pretty severe global recession. The narrative out of China is very negative. The narrative out of Europe is about as negative it gets. Still early days, and they're tightening. And the U.S. is just catching up. We've had 2 quarters of negative GDP growth. I fully expect we're going to have a pretty severe recession globally, which probably will make Bitcoin shine, gold, and potentially U.S. Treasury, along with gold and U.S. Treasury long bonds. Now, I look at Bitcoin as becoming more and more a leveraged version of Treasury bonds and gold, some form of combination of that. Ethereum's leveraged Bitcoin in a way. I mean, if Bitcoin goes up 2x, Ethereum goes up 4x. I mean, I expect that to continue. And you know, Bitcoin's basically beta in the space, and it should be, but it's macroeconomic beta. Ethereum's more related to what you see in advancing technology, like from the NASDAQ. So, yeah, on a bull market, Ethereum will probably outperform, but I think they fit well into a portfolio together with a diversified portfolio of other cryptos, and I believe that's going to be the case. And that's the way I think institutions are looking at it, is why put your eggs in all in one basket? You might buy Bitcoin as kind of a complement to your bonds and maybe your gold, but you probably want more of a basket of cryptos so you don't have to try to pick out the next winners.
McGlone believes that Bitcoin is in a process of recovery as commodities will begin to crash. He points out that copper and lumber have declined tremendously and that the impending global recession will be severe and will ultimately cause Bitcoin to shine. Even though McGlone holds Bitcoin in high esteem and in the lead of the coming bull run, he stresses that it is imperative that people consider holding more than one crypto in their portfolio. As markets fluctuate and the world economy changes, having a diversity in cryptocurrency allows for flexibility in considering who the next winners will be. What do you guys think about Mike McGlone's opinion that the second half of 2022 is going to be one of the greatest bull runs in Bitcoin history? Let us know in the comments below. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.